Hello everyone, it's Shiva here again. Um, Over the course of the next few months, I'm going to be putting up a number of videos, short ones hopefully, that's going to explain a lot of tidbits that you'd possibly need to know in order to become better traders. Um, don't worry, I'm not going to make them complicated. I'm going to try and make it as simple as possible. This one in particular is going to be about support and resistance, zones and lines. Someone asked me today about the difference between support and resistance zones and support and resistance lines. A lot of you have taken up my advice and started jumping on YouTube and learning price action, learning support and resistance, learning candlestick patterns, chart patterns, things like that. That's all great, and I believe some of you have become a little bit confused as well, because it's in particular to do with support and resistance. There's a lot of different stories flowing around, or different methods that people are talking about. So I'm going to do a quick video here to explain the difference between support and resistance zones and support and resistance lines. So what I've got here is the Euro USD 15-minute chart. I've taken all the indicators out. Um, the reason why I'm doing that, I do want all of you to start learning how to trade binary or forex using naked forex charts. Uh, this is where you start to look at price action yourself and decipher where the market is about to go, or where the market is wanting to go. Um, I'm not against indicators, but I do believe that indicators can actually be detrimental to a lot of our trading, especially when it comes to forex. You'd possibly miss out on quite a lot of gain simply by utilizing indicators. And the reason is that all indicators are lagging. They all take market data into consideration, and by the time they actually shoot out um, a buy signal, a sell signal, or even some sort of signal to state that a setup is happening, by that time, in most cases, it's possibly too late to execute a trade. Okay, support and resistance and naked charts are possibly the better way to go. Now, with support and resistance, you can look at it in two ways, and here's where the videos may get confusing in relation to the YouTube stuff that you might be viewing. Most of them will most likely be talking about support and resistance lines. Okay, now the key difference is this: the zones literally mean just an area, whereas the lines specifically are about a price point. Okay, so let me give you an example. Now, I tend to use support and resistance lines on shorter time periods, so anything less than the 1 hour charts. Okay, and what I would do here on the 15-minute chart, I'd click this button here to drop a horizontal line. So I would look at this, and again, I tend to only use support and resistance lines in markets that are consolidating, and by that I mean where they're kind of just going sideways. They work much better, and you guys can utilize this as a strategy as well. So I look at this point here. Now at the bottom of this wick, I'm going to drop a line. Um, See this? This is now my price point, and this is going to serve as a support line. Okay, and basically what I'm saying is that if price action comes and hits this line or goes beyond it, I'm going to consider if it actually is suitable for me to do a call. I'll grab another line here and say, okay, I'm going to look around to see what price action has been doing around here, and I might drop a line just at the top or just in the middle of this one, between this point here and this point here, and you can drop it whenever you like. Some people do it at the beginning or the end of the actual body. I like to do it in the wick space, simply because I think it's much safer for me to end up in the wick space. So these 2 points here, that's my resistance line now, and that's my support line. Okay, so again, what I would be looking at is to see, and you'd probably notice this isn't moving. It's I'm in a resort here in Goa, and unfortunately these guys don't actually have Wi-Fi in the rooms. I have to go to the public places to get Wi-Fi. Don't ask me how. A five-star resort doesn't Wi-Fi in rooms. Um, so I'm actually just for the sake of examples doing this off my MT4 that has no live feed. You can see no connection here. So what I would be looking at is or waiting for is for price action to come in, either hit my support line or my resistance line. Okay, and then depending on whatever strategy I want to utilize, I will then execute a trade. So if one of my strategies that has a lot to do with support and resistance lines on a 15-minute chart is basically this. I look for charts that have significant wicks on them, like this and this. So what I would do is I would have in this case, I might have drawn in my resistance line here. And so what I would have done is, price action would have gone all the way up here. At that point in time, I would not have had this line. I would have waited for this. If price action here would have gone and hit this line, I would have then executed a put for the remainder of that 15-minute candle. Okay, there's more to that. I use a couple of moving averages and a few other things to decipher the trade, but just off naked forex trading and utilizing support and resistance, that's how I would trade that. Okay, but in this case, since this completed, I drew in my support and resistance line here. So what I would have done is, if at any point in time this or this would have come and hit my resistance line, then I would have thought about executing a trade. Okay, same here. When this line hit, I put in my support line. This came in and corroborated my support. Okay, now this was a green candle. If at any point in time, for example, this one, say for instance this jumped down and hit my line here, I would have then considered doing a call trade on that. Now if we were to jump, let's hope these, yep, if we were to jump onto this here, for example, what I could have done is drawn in a support line at the bottom of this, and then every time price action came in, fell somewhere around here, I would have considered doing, because on a 5-minute chart, I would have considered doing maybe a 15-minute call. So here, price at some point would have come down and almost hit this, and I would have considered at this point, at this mark here, to enter a 15-minute trade doing a call. And that's generally how support and resistance lines work. Okay, you can't really do this on a trending market because if the market's trending, you'll probably just keep going. But certainly on a consolidation market, perfect. You can utilize that. Okay, now let me get rid of these lines. Jump back onto the 15-minute chart and get rid of these as well. Now, when it comes to zones, that works slightly different to support and resistance lines. Okay, and when it comes to zones, I utilize them on higher time frames. So I might look at the 1-hour chart or even the 4-hour chart. Generally, zoom out a little bit. Get rid of this as well. Now the way to look at a zone is where you're looking at particular points where price action has come and hit. So I would look at this area here and say, for some reason, price action keeps bouncing off here. Okay, now this is on the 28th of October. This is today. Okay, now based on this zone here, what I would be thinking is that if this price was to come and hit anywhere near this, there's a chance that I could do a call trade, simply because there is some sort of support here. So it's basically just saying the market touched and hit at this point and got burnt. It came back down, remembered that, and bounced off, so it veered away for a while. Tried the same thing here. This isn't that close, but I would say it came down, jumped back up. This is retrying that. And psychologically, I could say, well, hey, the market may remember that it got burnt here the last time, so it's going to come back down and bounce off. How much that bounces, I'm not sure of, Certainly what I can do is to say, well, I can decipher a strategy where if I'm just doing a shorter trade, around that point in time, I might look at maybe a 15-minute chart and consider doing a 30-minute 1 hour trade. Or if I'm just trading just on the 1 hour chart to see if price action does come hit that mark or somewhere close to it, and I may consider at that point in doing a call just so I end up in the wick space. Something along those lines. I don't want to confuse you guys too much, but basically a zone is an area where price is kind of a bit wary to come to. Okay, let's move forward and see if we can pick up some more areas. We can jump on the 4 hour charts as well. So if you look at these areas here, for example, where can I draw this in? If I can draw in a line around here somewhere, notice how this is the 24th of September. This here is probably the 1st of October. Now you notice how this price came hit, this on a 4 hour chart, and this came bounced off here as well, went back up. I would then note this zone, and if and it's certainly again with forex, with price action coming somewhere around here, there was every chance what I could have done is to execute a long trade with forex somewhere around here, and that would have gone up. Certainly you've got to watch it for a number of days, but that certainly would have gone up. If you see these sorts of falls happening, guys, certainly be wary of that. But see this candle here, I don't know if you guys can see it. Let me zoom in. See this one here? Price action did come, and again 4 hour chart, price action did come, hit this line, went below, and then bounced back up again. So that's the third 1 2 1 2. You could consider that to be 3, and that's the fourth time price actually bounced off that zone. Okay, that's what I would call a support zone. So your support and resistance zones. Okay. The other thing to note with support and resistance zones is where the zone could be any amount of depth. So this is still within the zone. It doesn't necessarily have to hit the line we've drawn in. With support and resistance lines, you would want price action to come and hit the line. Okay, so if I jump back onto my 15-minute chart and said I was going to draw in a support and resistance line, so say for instance I drew that one in. This is a line, I'm looking at a particular price point. Now if I was to say, well, hey, at this point, see this tiny little shadow here, this came down, and when if it had to do with a zone, I might have considered executing a trade just there. But because I'm looking at this from a support and resistance line point of view, I would want this to come not only hit that, but also to give me a bit of a buffer. If it gives me a bit of a buffer and price action comes and hits here, I will still win that trade, even if that candle was a different color. Okay, here, same thing. Like I would want, if I've drawn this line in here, I will want this to come and possibly hit and go a little bit lower. You can certainly just take the trade off there, but note that there are going to be times when price action may just stay red and come down here and maybe even hit your support line or be very firm against your support line. So I would like to be a little bit beyond that line just so my trades are safe. And this is a key example here. So if we use this as a support line, hit this here, came close here, this came very close, and if we were to say, well, hey, this is falling quite rapidly, it's hit my line, and execute a call here. Now notice how the body of it just kept going. Yes, you would have still won the trade if you were in the lower part of this wick here, but where and how would you know where the body is going to retract to? Okay, so for that reason is where I'd like a little bit of a buffer. Even if I had a slight buffer here, I possibly would have lost that trade. Now here's how you can avoid that. At any point in time you see these long candles, avoid taking a trade, especially a reversal on that. Avoid taking the trade. simply because there is something. It could even be a fundamental reason. Actually, more often than not, there's a fundamental reason for it. Uh, if the candle's long, realistically you have no idea when that's going to stop or when that's going to retract. Okay, the only point you will be able to kind of decipher that is if you've got a very strong support and resistance line. So here I would say, hey, there is a support line here that it did hit, but it did break as well. Um, but the resistance area, the support area, really for this was down here. Okay, now if we were to drop a line, for example, here, because that's where we say it bounced off and went up for 30 minutes. Uh, okay, let's see if our second line. Okay, notice this here. That is our support zone. And so that second line actually did hit on the 29th of October. Okay, so that's where price action bounced off, and that's why. Notice how we wouldn't have noted that if we were just to go off support and resistance lines. But if we were to look at zones as well, if we zoomed out, that hit there was that hit here, and that's how we would notice. So that's how we would have possibly executed that trade. It does pay to have a snapshot or a longer term snapshot of what has happened in the market. And if you get into the frame of mind where you're looking at the overall snapshot, say for the entire week or the entire month, and you can draw your lines in this way, you'll note key zones where the market has been bouncing off. And then in the shorter time periods, you'll also be able to utilize the zones to create your effective support and resistance lines. Now, one of the traders, Bivan, asked me, how do you actually decipher where to draw in the lines? Guys, basically it's where I feel like, when I'm looking at the charts, where I feel like the price action is constantly bouncing off. So for example here, price action just bounced off here, this came, bounced back, this candle came and stopped here, this one started here and just kept going up. So I would say that's a key support area. Okay, if you see any single point where price action has bounced off or hit twice, you can consider that to be a support and resistance area as well. Okay, the other thing to note is where this was a support at one stage, if the market breaks through that, and in this case it has eventually, that then becomes a resistance line. So you could actually utilize the same thing as a resistance line much later on. So that was a support here, that was a support here, that was a support here. This candle broke through it. Okay, now this becomes a resistance line. For that, it's a resistance here. For that, it's a resistance here. Okay, I think that's just the psychology of the market and the traders behind it. The other piece of advice I'd like to give you, personally speaking, if the market has hit a particular point, I possibly would only look at trading that for another 1 or 2 trades, that particular line. Maybe just even the single trade after that. I may not consider doing a third one because there's every chance that the market is going to break through it eventually. And in this case, this established the support. I would have traded this support here. Chances are, based on this, I would have also traded the support possibly here. I would have drawn in another line at the base of this after this trade, and then I would have traded this candle here somewhere once it broke this support line. After that, I would not have taken this trade. Even though I would have not have known that the body of this would have been so long, I would not have taken this trade, simply because you don't know for how long that's going to hold. Okay, so generally speaking, my personal rule is after the first support line is drawn in, maximum of 2 times. Also, when it comes to zones, well, you can literally just decipher that on your own. if a zone is hit in the past, chances are that zone will remain current, and if price action was to come back at that point, chances are that there may be some reversals happening just off the same point. Okay, I hope this makes sense to you guys. Certainly ask me any questions that you have. If you could just put it in comments so I can reply to the comments there, and anyone else that has similar questions would be able to have a look and understand it that way. So in short, that's where support and resistance comes into play. You can utilize this with the EMA6 strategy as well. It just you'll have to be a lot faster with it, certainly. Also, with support and resistance lines, if you can draw them in and if you notice your harami is set up around them, then there's a great chance that that's a winning trade. But you can also then utilize support and resistance trading as a separate strategy for yourself. I would encourage all of you to just get a simple chart like this and start to have a look at what price action is doing. Look at points where the wicks or the bodies are just bouncing off. Look at them as like an invisible trampoline and wonder why price bounced off there. So if you look at this, wonder why these candles went all the way up here and why did it bounce back? Why did the market then head back down from this point here? Look for then, draw in your line. Grab a horizontal line, draw this in. Go across your screen and start looking for why that happened. Notice here, this actually was a resistance area. The market remembered that. It remembered it here, it remembered it close to this, and it did, and then so it bounced off here. This is a resistance zone. It's not a resistance line because we're not just looking at the price point. We're looking at this here. It's just this area where prices have been bouncing off. Okay, you can utilize that in your own trade. So notice this, we would have established it here somewhere. Price came close to this, bounced off, came close to this, bounced off. Now this broke off, but when price started again up here, it bounced off. This zone here, notice how it used this area as a support. These used it as a resistance, this used it as a support area. Same here, this broke off it. It didn't use it as a support here, but used it as a resistance area. And then price came back up and used this again as a resistance area. So if you start thinking along these lines and you start paying attention to what happened with price action all around here, say for example just these 2 points here, where for some reason it used that exact point or that area as a support line, then you take note to say, and I personally would draw in a line here, and then if price action is jumping up around here somewhere, I would consider that price is going to fall back down from that point. So I can start developing possible trades for those areas. Okay guys, so I'm not going to confuse you guys anymore. I'm going to stop the video there, and if necessary I'll clarify some things later on. Okay, all the best with this.